In this video, I want to talk to you guys about the 5 reasons why you may still be unprofitable. Now, as I was making up this list to make this video, I was just reflecting on the habits and the mistakes that I personally was making during my trading journey as to what was stopping me and preventing me from that profitability. Now, the first one and the most important one, in my opinion, is to journal your trades. Now, I have talked about this a lot in on my channel, and I think it's very important to have a nice, well put together journal. Now, journaling your trade may feel like unnecessary, or may feel overburdening, or you may feel like you can't be asked to do that. However, you need to understand trading is a business and you need to treat it like such. And collecting data and gathering all of that statistics is very important for you to understand where you might be going wrong. Now, it'll be very difficult for me to just answer your question of why you might be unprofitable by not looking at your trading style and your trading statistics. It is very difficult to understand where exactly you might be going wrong, and only you can answer that question. And by having a set of data in your Notion journal, like I have for example, you can start piecing together where you might be going wrong, and having that data will make you understand where exactly the potential drawbacks are coming from. Is it potentially a certain specific day where you're finding unprofitability, or is it a specific session or a specific time? These things are very crucial to filter out to understand what may be causing the unprofitability. This leads me on to my next point, which is managing your emotions. By having a journal, you can also type out what you was feeling during that time, and so you're able to keep a record of your emotions and what you go through during the process. So when you're analyzing the trade, how are you feeling? When you've executed the trade, how are you feeling then? And when you are fluctuating in drawdown, what are the sort of emotions that you're going through? And similarly, when you're in profit, what are the sort of feelings you are experiencing at that moment in time? Having a journal of your emotions may feel, again, unnecessary, but I think it's very important for you to collect a record and then look and do a monthly review over that to understand the sort of emotional patterns which you are facing. So some of you may be feeling FOMO because you feel like the price is going to leave without you once you've analyzed the opportunity. That may cause you to enter early, or that may cause you to enter prematurely or impulsively when the move has already left your potential entry area. Now, by having that record, you'll be able to track how often you are feeling FOMO and put into place certain tactics to prevent FOMO from taking hold of you. So for example, when I used to feel FOMO, the way I overcame it was by placing a smaller lot size than I would usually. So if I'm willing to risk, let's say 5 lots, if I feel like it has not completely hit all of my criteria, but I'm feeling FOMO, I may place a 1 lot or a 2 lot and then place the remaining 3 lots when it comes to my ideal entry point. So that way I know I'm at least in the trade, and if it does go into drawdown and hit the ideal setup that I want, I can then enter my full scale risk. Else I'll just let it run at a 1 or a 2 lot. But having these strategies and having these tactics will only be effective if you got data to collect and patterns to analyze. Now again, one point just leads on to another. The third point which I would need to make is the fact that you need a trading plan. Again, having a trading plan, having a set of rules and having a set of criteria which you can follow step by step to execute a trade will take away all the guesswork out of your trading. For example, I have a set of criteria which need to be fulfilled before I enter a trade. Once I've entered a trade, then I have another set of criteria which are my trade management rules. Where exactly am I going to exit if I'm wrong? Where exactly am I going to exit if I'm right? What happens if it doesn't fully reach the TP that I was anticipating? Where do I get out then? What happens when I've got some fundamental news coming which I wasn't expecting? All of these scenarios have been put into my trade management rule, so all of that guesswork is taken out, because it's very difficult to make the right decision on the spot within a split second when you're under so much pressure. Having all of those decisions made for you in like a prerequisite and a criteria which is written out nicely in a Word document which you can refer to, you can trust and have confidence in, is very important, because making those decisions on the spot can be very detrimental to your trading, and you may end up regretting it when you look back at it in hindsight. So having a trading plan, having a step-by-step process of why you're exactly going to enter the trade, when you're going to enter the trade, what sessions, what days, all of that, all of the above is very important to know. And also having a follow up of what you're going to do once you've got the outcome you wanted. So if it was a profitable trade, what is now the next step that you're going to take to ensure that you're able to repeat that process again and again and emulate the same profitable trade that you took that time the next day as well. Now, the next reason why some of you may be unprofitable is based off the fact that you might be entering trades or getting into trades which are not high probability. Now, what do I mean by that? Now, of course, everyone's strategy is different and everyone's going to have their own requirements as to why or when they're going to enter. Now, a good rule to have, regardless of whatever your strategy is to have multiple confluences before you enter a trade. Now, whether you're a supply and demand trader or you're an ICT trader or whatever other strategies you're using to trade the markets, having multiple confluences is essential to your success and to your longevity in the forex markets. Just having one thing line up in your favor, or even two for that matter, may not give you that high accuracy and high probability trades that you're looking for. Now, a good rule would be to have at least 3 confluences before you enter a trade. Having at least a minimum of 3 confluences, I think, is sufficient to be able to be confident in taking the trade and knowing that it's going to go in the right direction. Now, those 3 confluences cannot just be random confluences which you make up on the spot. That needs to be, again, in your trading plan, something that you've back tested and something that you can rely upon and are confident in to be able to execute based off those 3 confluences as a minimum. Now, the last and final reason which I want to discuss as to why some of you may be unprofitable is due to the fact of your risk to reward not lining up. Now, that goes without saying. Having a positive risk to reward is essential to making sure you are a consistently profitable trader. Now, a 1-to-1 risk to reward isn't the best because that then highly depends on your accuracy. Having a strong accuracy and a high accuracy becomes absolutely essential if your risk to reward is just a 1-to-1. Now, what you'd ideally want to do is not put so much pressure on your accuracy, as well as not putting so much pressure on your risk to reward. So, for example, having a risk to reward of a 1-to-10, but your accuracy being 20 or 30%, yeah, that may still turn out to be a profitable strategy. However, you are highly dependent on your risk to reward coming through each and every single time. By being diverse and having a somewhat good accuracy and somewhat good of a risk to reward means that you're able to balance out those 2 dependent factors which allow you to become profitable. So having a risk to reward ratio of a 1-to-3 is good enough, and also having a accuracy of a 60 or a 65% accuracy is also good enough. Now, you're not depending on one over the other. You've got a nice balance of the 2, and if you're able to hit higher risk rewards than that, then it's a bonus. And if you're able to get higher accuracy than the 65 that I've stated, then again, it's a bonus. But having that as a core foundation and not being highly dependent on just one factor over the other, I think is very important in being profitable in the markets. These are just some of the things which I was going through when I was first coming up in this trading journey and becoming more and more consistent and more profitable. So I hope you guys did find this helpful, and I hope it does help some of you, and I hope you guys do take these tips on board and implement it in your strategy to bring yourself out of that break-even phase, or to take yourself from a losing trader to more of a break-even or even a profitable trader. But one thing which is very essential for you guys to understand is that trading is a journey. Trading will take 1 to 2 or even 3 years for you to reach that consistency, for you to reach that profitability, and it's not going to be an overnight thing. It's going to take years, and it's going to take a lot of hard work and dedication for you to reach your goals. So I hope you guys found this video informative. If you did, be sure to drop it in the comment section down below what other tips you may recommend to other traders which are losing traders or break-even traders. And other than that, I'll see you guys next time.